GST and tariffs. Last week, President Trump put out a statement on social media saying that the United States will consider countries that use the VAT or value added tariff system, which is far more punitive than a tariff, according to him, to be similar to that of a tariff. Now, VAT is similar to GST, and there have been some concerns on whether the reciprocal tariff value could be higher than what might or might have appeared earlier. Trump also talked about sending merchandise, product, or anything by any other name through any other country for purposes of unfairly harming America, and that will not be accepted. So what he means is, for example, a Chinese company manufacturing in Vietnam or Mexico and then exporting to the United States from there. Trump also said that provisions will be made for non-monetary tariffs and trade barriers that some countries charge in order to keep their products out of their domain. So, conceptually, what's the linkage between tariff and GST? I reached out to Sachin Menon, senior tax advisor and former head of indirect tax at KPMG India, and I began by asking him if the GST or VAT comparison was a fair one.
If you look at the structure of Indian customs duty from Indian perspective, there is a basic customs duty which is between 7.5 to 20%. Some items, very few items, which will be prohibitive tariff, which will be more than that. But generally, it is between 7.5 to, and most of them are at 10%, and some of them are 20%. So there is a basic customs duty that is 7.5% to 20%. On top of it, there is an integrated GST at the rate of 18% normally, and it depends upon what is the rate which is locally applicable. The same rate applied on as integrated GST on the assessable value plus basic customs duty. On top of it, if you add the assessable value plus basic customs duty plus IGST amount, there is a 10% social welfare surcharge, which is meant for certain purposes, which the government making a fund. It's a kind of cess. Now, if you see this IGST amount, whatever you are paying as a part of the import duty, that will be available to the reseller or manufacturer or trader as a input credit, 100% input credit. So essentially that element of GST is concerned, it is a neutralizing impact. It is not affecting, because same GST is charged on the goods manufactured locally as well. So therefore, the Trump statement to say that he said that the use of the VAT system, which is far more punitive than a tariff, to be similar to that of a tariff, is not correct. I disagree with that observation. So that maybe perhaps they may not fathom what is the rules.
But the principle of it, or at least what he seems to be saying now, none of this may eventually pan out this way, but is that basically if the product is, let's say, worth 100 rupees, you are putting, let's say, 20% import duty, but then you're adding another 18% GST. So effective cost to a consumer in your country, as opposed to mine, which is the United States, is much higher, whichever way you decide. So how would that work then, let's say, for other countries where duties are?
Essentially, it seems that what he's saying is that you charge whatever customs duty you charge, I'll charge you as well. So it is a fair play, equal ground. And he's also saying that supposing the neighboring country lower the tariff, USA also reduce the tariff equaling to that domestic country's tariff. You have a higher tariff, but what you are doing is we are routing those exports to US through those other countries. That possibility also he is mentioning in his statement, that if you are sending any of the merchandise through another country, then we'll have provision for unfairly harming America. And then again, they are saying that there are subsidies given by some countries in order to take economic advantage of US. That also they will make provision. They are also talking about other non-tariff barriers, trade tariff barriers, which is essentially talking about import ban or quota system and rules of origin requirement, then export subsidies, then the plant and animals, they have phytosanitary certification and other veterinary certification, etc., quality conditions imposed, licensing requirement, then anti-dumping and countervailing duty, etc. All this he is saying that we will also make the similar provisions. But then many of these subsidies are perhaps discussed and endorsed by the WTO under the General Agreement of Trade and Tariff, the GATT agreements. the way he is talking about is unilaterally imposing such kind of duties and restrictions would be in collision with the terms of the WTO agreement as of today. So that is going to be a disastrous scenario where the disputes will be many.
Right. Last question. So, when we negotiating with other countries, how do they see the GST factor? And is our sort of GST decision linked at all to what the international pricing or landed price might be of similar products?
Not really, because at the end of the day, whatever maybe those export, what they are making, and in case if that export is subsidized in the exporting country, so that the goods enter the market of another country at lesser cost. Actually, the cost is subsidized by the government by their own funds, whereas actual cost is much higher. Since government is subsidizing that, the exporter is able to sell that product at a very throwaway price to the destination country. Those kind of issues aside, as far as the VAT element is concerned, it's a neutralizing effect as far as VAT is concerned. When you are exporting the goods to other country, India is not charging any VAT. If at all they charge VAT, then that will be reimbursed. And similarly, when importing also, they are giving that benefit of either refund or the credit as based on what are the conditions attached to it.
Sachin, thank you so much for joining me.
Pleasure.